I was always convinced that one day people would understand that the financial system is a house of cards. The central banks always work together to fight gold. And now we're reaching the end of the monetary experiment. And the fact that all these central banks are now buying gold for their own reserves is an indication that they know what's coming and they are preparing themselves. If we would see a collapse of the paper trading system centered around the COMEX with all these unallocated precious metal positions, I wouldn't be surprised when gold would shoot up to $10,000, even $20,000. That silver would move in a very quick and violent way towards $100, $200 per ounce. I'm quite sure that central bankers will initiate a comeback for gold in the financial system.
Welcome to the Microscopic Podcast presented by GoldRepublic. My name is Alexei Joranov, and in this format I invite you to look at the world through different lenses to see what's hidden in plain sight. I hope you will get fresh insight and enjoy this conversation. If you do, as always, please give it a like and subscribe, but also leave your actions down below in the comment section and share it to those who need to hear this. But before I start, I'd like you to know that if you open an account at GoldRepublic, you will receive 1 free gram of gold. Just click on the link in the description. So today I have the pleasure of recording a very special interview with Willem Middelkoop. It's, I can say by now you're a friend. I consider you a friend. And it's great to have a friend like you, I would say. The oracle.
We've been in Cape Town, we've been in Dubai together.
Jump from a plane.
Yeah.
You did it as well. And recently, and a bit of context, I think is very important to put a bit of context of this interview is that most of this interview will be used for the documentary that we're recording at the moment, that we're producing at the moment, which is a collaboration of the OMFIF and the Commodity Discovery Funds, based on the report that is right behind me, right here, that we've published in December 2024, entitled Gold and the New World Disorder. And in this documentary production process, I've already interviewed quite a lot of people, former central bankers, very high profile, like the vice president of the ECB, but also Bill White from the BIS, and all kinds of really high-profile experts. So make sure to subscribe and stay tuned on when we'll publish this documentary. And today we'll actually start the topic with the OMFIF. We both were there last week in London, which was a private gathering, semi-private gathering, intimate gathering of central bankers, but also policymakers, and not just any. We're talking about the creme de la creme, the top layer. And the first then maybe point would be, what is the OMFIF? And you've introduced us to the OMFIF, that we're able to access them and their, all those experts that they have. So what is the OMFIF to you, and why do you find it so important to have access to this think tank?
I'll explain a bit about my history with OMFIF, but to show how important it is for guys like us and yourself. Last week was the first time I was in a meeting on gold with central bankers of the Bundesbank and the Polish Central Bank, one-to-one. Where can you get access to these guys in a meeting one-to-one discussing gold and the monetary aspects of gold other than the OMFIF? Because the OMFIF is the only monetary think tank I'm aware of worldwide where the central bankers are meeting the private companies like ourselves, hedge funds, banks, institutional investors can become part of OMFIF by being a sponsor of OMFIF. Of course, you have to pay them a fee. It's a business model actually which was invented by David Marsh, the founder. And David Marsh, as you know, is a very remarkable guy.
Quite a character.
Yeah, he's typical British. He's a former journalist. He used to be a Frankfurt-based correspondent of the Financial Times during the 90s, during the years where the euro was actually designed. So he had access as a Financial Times journalist to all these Ruud Lubbers, the Mitterrands, the Helmut Schmidt, all the big guys out of the 90s. And he always, because he's such a special and likable character, he became friends with all of these guys. And I became aware, so he started OMFIF after, I think, he retired from his official Financial Times career. And actually, he was writing about gold a lot in the 70s and 80s, so he was also the gold correspondent. But when he retired, he had this idea, let's build a community with all the central banker friends I accumulated over the years and make them accessible to the private, the institutional investors and guys like ourselves, and who can pay a fee. And then I'll arrange conferences and publications. So he started that around 2012, I think. And I first became aware of it because I was researching a new book, The Big Reset. I was doing research around 2013. And I found online, I think somewhere on Twitter, a title of an OMFIF publication. I was aware of OMFIF, but it was on the internationalization of the renminbi and the rise of gold and the birth of a new multipolar system. And I was immediately, of course, very interested because I was researching all those aspects of the move for this monetary system towards a new phase. So I contacted OMFIF right away and asked if I could receive the full publication. And they immediately sent it to me, and I was surprised because there was a lot of central banker stuff in there. And my experience with central bankers is that they're always very closed doors. You can't hear what's really going on behind the scenes. And there was so much good stuff in this report. So then I contacted them again by email and said, well, could you please put me on the mailing list? And then they came back to me, oh, we have this nice conference in 10 days and we have 3 Chinese central bankers coming over. Do you want to join? And I didn't have to pay a fee, so I booked a flight to London. And I arrived there, and I met these great characters from the Chinese central bank and commercial banks. For
Which
example,
year was that?
Sorry,
Which year was that?
2013 or 14. And I met Ben Shenglin. He's an important guy. He's a professor now, finance professor. And he invited us to come to China for the next conference, which they organized together with the OMFIF. So I thought, this is amazing, these guys opened doors for me, which were always closed, because I'm a journalist myself. I turned into a fund manager in 2008. So I always considered myself, especially at that time, still being a journalist and not having access to these guys at that level. But because I was a fund manager, they asked us to become a sponsor and a member of OMFIF, like all the other banks are, and insurance companies and all these huge institutionals. And he invited me to become a member of the advisory council. I thought, well, this is very special. Later I learned that there are quite a few members in the advisory council, but from the Dutch, from our country, Ruud Lubbers was in the advisory council, the former prime minister. Bolkestein, which was a very top guy, he passed away a few years back. So my peers in the advisory council from the Netherlands were all these big guys from the world of politics and a few professors. And that was a real a nice experience to become an insider among the insiders. And that has really helped me to better understand how the financial system works.
During that event, we had also giants of like central banking world, like Lord Mervyn King, former governor of the Bank of England for more than 12 years, I think. Then we had Vitor Constancio, who I interviewed as well, VP of the ECB for at least 8 years. All kinds of Mario Monti, former prime minister of Italy. all those guys were there, and we were just sitting next to each other in the first session, and already then it was pretty clear. There's one thing that was very apparent, is that they talked about a lot of stuff, but as they were talking about all those important topics, they didn't address, I think, the what you would say the gorilla, and I would say the elephant in the room, gold, which was breaking records in price. I think this year alone, we've had 38 or 40 all-time highs. And this is very unusual for gold. So what would you say for you was the main takeaway lesson of that meeting? And if, let's say, you would then compound it to all those years that you've been at OMFIF, what are one of the most important lessons?
When you hear a discussion or an interview or you read a book, I always ask myself, what's not being discussed? And that's the most important topic often. So I had the same observation as you had. Unfortunately, we had a gold session, a breakout session after the first general session, and the breakout session was on the first floor. Nobody
was an annex.
Yeah, but I always have to laugh when I'm with OMFIF about these because it tells so much how central bankers handle goals. And of course, the OMFIF now accepts sponsors like ourselves who come from the gold community. But we are not an official, we're almost like the B delegates. We have to discuss gold in a separate room on the planner. And it was very funny because nobody entered our discussion except two Chinese ladies. One was Chinese Singaporean, who was running actually her own hedge fund now, started her own hedge fund, but used to work for the Singapore regulator, monetary regulator, the MAS. And the other lady was from the People's Bank of China. You know, I checked her credentials on her ticket. So it was telling that all the Western central bankers ignored our discussion on gold. But there was a central banker from the Polish National Bank who was very honest. And there was a quite young central banker from the German central bank.
Hoban, yeah. Very nice guy.
And he was very open. And he clearly knew all about the gold story. So we had this very intimate session on gold while the big guys were discussing whether the euro could survive and ignoring gold. And I actually said during my opening statement in the gold meeting that the 800-pound gorilla isn't mentioned here, and that's, well, people are losing trust in world's financial system, in the fiat system. And actually, I have some breaking news. This was published this morning, coming from Australia, that people are, well, in a huge line waiting to buy physical gold. I've been writing about this for 25 years, that one day this would happen, that people would start to lose trust in the fiat money system. And in this meeting with OMFIF, we explained this. And it was the first time I chose to be more confrontational almost by addressing the elephant in the room or the gorilla in the room. And I also had some notes with me from the Central Bank of Venezuela with the 100 million. And I gave them as a present to my central banker friends, and I think I gave you one.
Mm-hmm.
So it was a very interesting meeting for me. It was telling a lot. It was showing me that although OMFIF is the most transparent monetary think tank, gold is still like it's a topic you better don't touch. And it shows the world of central bankers is still in denial. They're in denial that they're losing trust. They lost trust. They're in denial the fact that in the big reset, I have an appendix which shows all fiat currencies which failed over the last 250 years. It's a list of over 200 currencies. Half of them failed because of war or mergers of countries or revolutions, but the other half failed because of periods of hyperinflation, the last of trust in fiat money. And this is never discussed within central bankers. They know it because they know the history, the monetary history. They're great students of monetary history. I always tell people, central bankers don't say they're stupid. They're not stupid. They're highly intelligent. They know their history, but they choose not to talk about certain topics because it's too dangerous. It's too toxic.
So if we consider the gold question, but then more historically, because you just mentioned the central bankers are very knowledgeable about the monetary history, then it would be also important to put that into context of where we are today. And looking back at the evolution of gold in the last 200 years, and in the reports that was published, it starts with the 7 ages of gold.
Well, it was David's idea to break up the history of gold into these 7 ages of gold. And I think it makes sense. But in a way, it distracts as well. I prefer to see gold as almost a 3-phase history. You had the gold standard, which actually was running for hundreds of years. And of course, we had separate stages of the end of the gold-backed era, but it actually stopped in 71 because then the dollar was taken off of the gold standard. And of course, it will be in your documentary, but the history of Bretton Woods. But most important aspect of the Bretton Woods conference for me is that the European countries pressured the US to accept that the dollar could always be exchanged for gold. Otherwise, France wouldn't have accepted the Bretton Woods deal, which was designed to make the dollar the heart of the world's financial system. So the US always had to promise that the dollar was as good as gold. And European countries, so this was in 1994, they had to promise this. And European countries kept the US at its promise in the 1960s when they start to send all their surplus dollars back to the US and demanding gold. The French even sent one of their marine ships to Manhattan to collect the gold from the New York Fed vaults on Wall Street. So we have this era before 71, and then we have the fiat era after 71. And now we're reaching the end of the, monetary experiment, one could say, in which all money worldwide is no longer backed by gold. Even the Swiss stopped their gold backing in the 90s. They were the last ones. Because many people still think that the Swiss franc is backed by gold. No, it's backed by a hedge funds, which has shares in MicroStrategy and other tech companies. Look at the balance sheet of the Swiss National Bank. They have all these holdings in tech companies, and it's crazy. They even have a position in MicroStrategy, which is a Bitcoin proxy. So even the Swiss money is no longer backed by gold. And now we are reaching the end of this monetary experiment worldwide, where people are starting to losing trust in money, in fiat money. And first, this happened in Zimbabwe, Venezuela, Lebanon, but now it's happening in Australia. Well, you at GoldRepublic, you guys know way better than anybody else how many people feel attracted to hedge their net worth now by buying some physical gold and silver, just like the old days. And actually, you might be aware, I was a journalist for over 20 years. I stopped being a journalist in 2008. Why in 2008? Because that's when the Lehman crisis started. And I was aware, because of all my study on monetary history, that people would start to flee towards gold and silver again when a huge financial crisis would start, which happened in 2008. So I stopped in 2008 to start 2 companies related on precious metals. But I was expecting that the distrust on paper money would be happening way sooner. But it's now 17 years after Lehman, we see these lines for gold.
Sounding the alarm, gold is sounding the alarm of monetary debasement, and the previous all-time highs that we've seen, the consolidation and the speed, the velocity of the way gold is reaching an all-time high, it doubled in approximately 2 years, from going from $2,000 an ounce to $4,000 an ounce, and just this year alone gained 50%. In which other times of history have we seen this, and what happened then?
Well, the last time it happened was in the late 1970s, actually, when we had a huge crisis around the dollar, because the dollar, well, was taken off the gold backing in 1971. And what happened in the 1970s was this wave of inflation, and there was some geopolitical tension. The Iranians, after the revolutions, took over the US embassy, and there was the start of the Afghan war. By Russia invaded Afghanistan, so there was all kind of turmoil then. But if you look further back in history, there are dozens of examples where money was taken off the gold standard or introduced without the gold standard, that people start to lose trust. And often that ended into a period of superinflation or even hyperinflation, where people lost all trust in paper money. What happened in France at the late 18th century is a great example. But to come back on the question on central bankers and gold, they are ignoring the situation now, but they're very well aware of the role of gold to use. I'm quite sure that central bankers at one time will initiate a comeback for gold in the financial system, because without bringing gold back into the system, hyperinflation could develop worldwide. So these are the first cracks we're seeing now. It's alarming, but we shouldn't forget it's not the retail public which is fleeing towards gold, it's the central bankers which are fleeing towards gold. So although they don't discuss it within the OMFIF circles, we know from the data that we've had 3 years in a row, and this is the 4th year in which central bankers are buying over 1,000 tons of physical gold for their own holdings. So actually, if your business model is printing money and you're using that money to buy physical gold, you show a huge distrust in your own fiat money business model. And I think the public understands this. They feel it because of the high inflation. So we have this worldwide gold rush developing, in which central bankers and the retail audience all join each other. And we haven't touched upon the huge amount of unallocated gold, which means gold being sold to people which isn't there, well, stored for them in vaults. So it's like the musical chairs. Everybody's looking for the last physical ounces of gold. And now we're reaching a phase where the system could become quite unstable, and central bankers will feel the need to bring gold back into the system in one way or the other.
And so if we zoom in onto the holdings, the reserves that central banks have accumulated in the last decades, there's been, and David was mentioning this, from, let's say, the 80s on, 70s on, there was a big period of sales of, well, famously the Bank of Canada selling all of their gold, and then later on the Gordon Brown UK selling all of their gold, and John Nugent, which was sitting right next to me in a panel.
He had to sell the gold for Mr. Brown.
He had to execute that order. And Bill White, who I interviewed before, the
great
chief economist,
by the way.
Thank you. Okay. He had to sell from the Canada side. So
you had the two main persons now.
I met two people.
But they were doing that. They were selling the UK and Canada. I'm quite sure this has never been officially, recognized, but I'm quite sure. What do Canada and the UK have in common? They're the closest buddies of the US. So why were Canada and the UK both selling their gold holdings at the same time? Because the US asked them to do that. Because the US was in a process to demonetize gold. After the US was pushed out of this gold-backed dollar in 71, we arrived in this dollar crisis, which brought inflation, sent gold rocketing from $35 in 1970 to over $800 in 1980. So the US had to fight gold. Gold was the enemy after 71. Up till 71, gold was a friend of the dollar. But after 71, gold became the enemy. So the US asked its friends to start selling gold reserves, to send a message to the market that gold wasn't money anymore and gold wasn't valuable anymore. And it's a reason why even the Western central banks, besides Canada and the UK, so like the Dutch central bank, sold a lot of their golds, because the US was very successful and used a lot of tricks to convince their friends and partners that gold wasn't important anymore. And I think the US explained to Canada and the UK that they needed to sell the gold, to bring trust back into the dollar system. And these guys, they listened to the big brother. I don't have real proof for that, but everything points to that situation.
Mm-hmm. And there was the London pool, if I'm not mistaken, that was also created under this intent to suppress the price of gold. And then later on, you've wrote a whole chapter on your book, The Big Reset, and also in the report about all kinds of manipulations, spoofing, ways of doing, suppressing the price of gold.
Well, I call this, the subtitle of The Big Reset is The War on Gold and the Financial Endgame. So the war on gold is a central part of the US policy to keep a strong dollar policy. The London gold pool is a very particular example, and this has been documented very well. So this is not just a Middelkoop thesis, but it has been proven that central bankers were aligning and designed a system in the early 1960s to keep gold fixed at $35 per ounce, like the formal agreement from Bretton Woods said. So to make sure that the gold price wouldn't rise in dollar terms, the central banks, European central banks, agreed to build a London gold pool in which every central bank from Europe would put in part of their gold reserves and start selling these gold reserves on a regular basis to keep the gold price down and fixed at $35. In the late 1960s, when European countries started to send back their surplus dollars to the US and ask for gold, a lot of pressure developed within this London gold pool system. And France started to get out of this London gold pool in 1968. So the French no longer were willing to sell part of their gold reserve to keep supporting the US dollar. And that actually led to the end of the London gold pool. That led to the end of the sales of these gold reserves. And that led to the collapse and the end of the Bretton Woods system. So in August August 15, 1971, the dollar was taken off the gold standard because so many countries were asking the US for a return of gold for their surplus dollars. So this explains and is a great example and is proof that the central banks always work together to fight gold. And after 71, the fight on gold, the war on gold became more, we became less transparent. But I'm convinced that the US has used so many tricks and smokes and mirrors to keep the secret of gold hidden from, well, the general audience. And unfortunately, most Western central banks, including the Dutch National Bank, helped the US in those efforts. A very important reason for me to write the books like The Big Reset was to inform the general public about this war on gold and what would happen when the war on gold would end. And actually that's, I think we're reaching that point.
And we've seen these first symptoms, and leading up to the symptoms today, so in 2025, and we're going to 2026. But this trend has already been noticeable since almost 15 years, since the 2008 great financial crisis, where we've seen gold reserves and central banks increasing and reversing that trend.
Yeah.
Could you maybe share with us what were the main reasons since the 2008 crisis on why all of a sudden central banks all around the world started revamping their reserves of gold?
17 years ago, in the autumn of 2008, we had a collapse of Lehman. We had a collapse of the, Western financial system. And when I was doing interviews in those days, I always said that later, if we look back to 2008, we'll learn that there's a period before 2008, there's a phase before 2008, and there's a phase after 2008. From if we study the worldwide financial system, up till 2008, central bankers and political leaders could keep promising to the general public that this system is sound, the dollar is strong, and we don't have to use gold anymore as a hedge for the risk in the international financial system. Even China and Russia weren't adding to their gold reserves before 2008. So between 1980 and 2008, we were in this long period in which the role of gold was being demonetized. People were treating gold as being just a commodity. It didn't have any financial reason. There was no financial reason anymore to own gold. It was just used for dentists and jewelry. And the US almost succeeded in the idea, having this idea accepted worldwide that gold was just a commodity. There were a few lunatics like myself, the gold bugs, who never trusted this idea. And I became part of a group in the US called GATA, G-A-T-A, which is like a financial Greenpeace, who always pointing to the cheating of the US Treasury and Federal Reserve, and always were convinced that one day gold would return. And I became very involved with them in the late 1990s because I was a real estate investor in Amsterdam. I had a ton of mortgages and I was studying the financial system. And the idea that gold would be the perfect hedge on your net worth, that resonated very well with me. So I started to study it from the late 1990s. And I remember I was at home with my wife at that time. We just bought a house outside of Amsterdam. And I said, I think I understand how the financial system works. It was in 1999, and she laughed at me saying, "Oh, you're the only one who gets it." But I was always convinced that one day people would understand that the financial system is a house of cards and it would collapse one day and people would start to flee to gold again. So I was working on this idea from that moment on. So in 2002, 2003, I was actually preparing for the financial crisis which would arrive one day. And I expected it to arrive earlier than 2008. I started working on my first book, Als de Dollar Valt, when the dollar collapses in 2005. And I was in a hurry because I was afraid the book would arrive too late. Actually, it was published in August 2007. That was the month the credit crisis started. That was 1 year before Lehman. And actually, I started planning to have this life after journalism in which I would be in business and make money on the flight towards gold. And that's why I started the bullion business. And that's why I started the Gold and Discovery Fund, later renamed Commodity Discovery Fund, in which offices we are. So for me, there was always this period before the crisis, before 2008, and the era after 2008. And I wasn't surprised that central banks were starting to accumulate gold after 2008 because I started advising my readers to do the same by selling them physical gold and silver. But I was shocked that journalists and other analysts never saw that watershed moment. For me, Lehman was a watershed moment. And now we're starting to learn that the repercussions of this watershed moments are gigantic because now all these central banks are accumulating so much gold that the gold price is starting to move. And even the tethers of this world, so the Bitcoin crowd, is starting to back that digital currencies now with gold. Tether is one of the huge buyers of physical gold. Tether is as big as the Chinese central bank now in the physical gold market. The latest numbers. So we're witnessing this flight out of fiat into the hardest assets possible, being gold and also Bitcoin, which is digital gold for me. And this is the start, this is the beginning of the end of this financial system. And I wrote in the Big Reset that around 2020 we would see big changes coming to the financial system. It always takes more time than you think, it always takes longer. But we're in the first innings of this monetary reset now.
And I wanna maybe also zoom in more specifically on the dollar, because the dollar has been taking center stage since its since the Second World War, and even more than afterwards. It decoupled from gold, and it took many different tricks, as you said, for the US to keep that as it is today. And there were many episodes in that. But recently, there's been a few episodes that really hurt the dollar as the global reserve currency. And that's triggered a move from other big players, central banks, governments, to move away from the dollar.
Yeah.
What were those crises and what were the consequences of that in tarnishing the dollar as a reserve currency?
Well, I think the decline for the US dollar as world's reserve currency started with the weaponization of the dollar. So there's a great book written by a former Treasury executive, US Treasury executive. It's called Treasuries War. It was published some 10 years ago, 15 years ago. And it explained how the US started to understand in the 1970s, 1980s, how they could use financial repression, use the dollar as a financial weapon, use the SWIFT system as a weapon to kick countries out of the SWIFT system, which is an international banking system. The start of the Treasuries War, some 30, 40, 50 years ago, resulted into a very strong weaponization of the dollar in the last 10 to 15 years. Iran has been a victim of that. Russia has been a victim of that after the Ukraine revolution, the Maidan revolution. And central bankers always knew that the US could use these tricks because they have started since the 1970s and 1980s, but it was always very limited. But after the US used all their power in this Treasuries war to really start to hurt Russia in the last 10 years, it became obvious to countries like China and most other countries which were very close friends with the US that one day this could hurt them. And when you start to think about the weaponization of the dollar and how you can address that question and how you can defend yourself against those actions, you need to go to gold, because gold is nobody's liability. So you don't need anybody's permission to have these gold reserve. If you own US treasuries, you always need the treasury to accept to take them back and to give you back your money. I always advise rich people who come ask for advice to minimize the number of doors between you and your net worth. So if you buy physical gold and silver and you store it yourself, there are no doors between your net worth and yourself. So that's the safest. The only risk is that somebody breaks into your house or puts a gun to your head and asks for your gold. And that's why I don't have any gold and silver in my house myself. But you need to store it quite nearby. And countries also started to understand this. So this explains why we've seen this huge run towards gold, especially since the Maidan revolution some 10 years ago. And if you study China's policies on gold, you can really see that China started to accumulate gold after the collapse of Lehman, because the collapse of Lehman showed to countries like China that the US wasn't as strong as the US always, positioned themselves. So China and Russia understood that US is actually very weak because the dollar is such a weak currency, and the financial system, the dollar-based financial system turned out to be such a weak system. So the countries in the East started to buy gold after 2008 and really start accelerate that process after the start of Trump 1, in which the US started to fight China with the new trade war.
And we see a clear trend as well of those countries dumping then the US treasuries and buying more gold, and to a level now where, if I'm not mistaken, we've reached in terms of the amount of US treasuries held by central banks and the amount of gold held by central banks, more gold held by central banks than US treasuries, and I think since the 90s at least. And if we look at the total amount of gold held by central banks worldwide and we compare it from the last 70 years, then we can see as well that we are coming back to the 38,000 tons that were held before the end of 71 and the pegging of gold with the dollar. So my question is, how is this then in terms of a remonetization of gold? How does the remonetisation look like, and where is it headed, especially on a geographical basis?
Well, when you study this history of the weaponization of the dollar, it's quite clear to me that countries like Russia and China started to weaponize gold. So they're using gold as a financial weapon now to harm the US. Because China and Russia understand very well what kind of tricks the US has used to support the dollar system and to start and develop this war on gold. One great example, which I mentioned in the big reset, is that GATA had a conference in the Yukon, I think in 2001 or 2002. And actually, I wanted to visit that conference, but I wasn't able in that year. But there was a Russian representative present at that GATA conference, in which all these tricks by the US on the war on gold were being discussed and explained. And the Russians sent one of their representatives to that conference. And it was a very tight-knit, very small conference, only maybe 20, 30 people there. And the Russians came there to study this US war on gold and started to understand how the US used this war on gold to support the dollar, and the Russians and soon after the Chinese learned to understand how they could use gold to defend themselves against these US policies. So I was never surprised that gold would be used more and more as a financial weapon to position countries like China, Russia, but also other countries. The Polish central bank is buying huge amounts of gold now. The Czech central bank is buying huge amounts of gold. Even the Irish central bank has started to buy gold. So central bankers, they aren't stupid. They know the role of gold in world's financial history. They understand that gold, this new trend to flee towards gold, not only by the retail public, but also by central bankers, it is a big new trend. It will only stop after a monetary reset worldwide has been succeeded. And that's becoming more and more difficult because, as I write in the epilogue of the big reset, we're coming from an era of cooperation after the fall of communism. The former communist country took over the Western capitalist system, built their own state capitalism, but we were in an era of cooperation. But now we're moving away from cooperation, and there's this confrontation between the East and the West. And it will be very hard to move world's monetary system to the next phase when there's no agreement between the East and the West. So the alternative is war. And I'm quite afraid about that. And if you listen to the Western leaders now, they're almost like preparing their citizens for war, for confrontation with Russia and China. And that's something which worries me most. And gold is clearly being used as a weapon for the non-Western countries to weaponize, well, their part of the financial system in a fight against the West.
Sorry to interrupt this episode, but I'd like to tell you more about what we do at GoldRepublic. At GoldRepublic, we provide physical gold, silver, and platinum, fully insured, fully in your name, fully allocated, in top-tier vaults, securely saved in Amsterdam, Zurich, and Frankfurt. No paper promises, just real ownership, full transparency on your name. We are fully regulated and conduct regular independent audits of our vaults with more than 700 million euros of precious metals under custody and 70,000 investors that trust us in the last 15 years. Our top-rated app gives you full control. Track live prices, explore detailed charts, and buy or sell in just a few taps. Whether you're hedging against inflation, currency risks, or financial stability, at GoldRepublic, we offer real assets to safeguard your generational wealth. And there's one thing as well that is very noticeable, especially in the last year alone. This year has been monumental in terms of symptoms and events that show the resurgence of gold. And you just mentioned it, the resurgence not only as a reserve, a natural, actually, again, from its nature, reserve assets, but also the rush of physical. And you've just showed now this picture of ABC bullion in Australia, but that has been also happening on an institutional level, and more precisely with the COMEX crisis, the inventories that's been drained and dried out at the beginning of the year. Could you maybe explain how this liquidity squeeze is coming into the picture and how this is just showing how important the return of physical gold is.
To come back on your question on the COMEX system and all the pressure we see building in the physical deliveries of gold, we should understand very well that part of the US war on gold was using future markets like the COMEX to be able to control the price discovery mechanisms for commodities like gold and silver, but also platinum, palladium, and some other metals. It's well documented that the US took a lot of energy in the 1970s to build very liquid future markets because they understood that if they could succeed in having most of the trading in commodities being done within the American trading systems through futures, they were able to control the price discovery mechanism. And it's well documented that the US and UK joined forces to fight USSR, Russia, in the 1970s and 80s by keeping the price of oil and other commodities down, and in that way pressuring the USSR into a fight they would lose. And the fact that the USSR collapsed in the late 1980s is clearly connected to these efforts by the UK and the US. But come back to the gold question and the gold story. The US understood very well already in the 1980s how they could use these future market to move the price of gold up or down, or to manage the gold price. Because if you're a trader on future markets, you can open up an account with Interactive Brokers, just deposit 1 million cash on that account, and then you can start selling futures in oil or gold or silver and become a market participant. And if your pockets are deep enough, if you have enough money and cash available, you can start selling huge amounts of futures and then creating a lower price for gold or another commodity. And I'm quite convinced that the US has used these tricks through their Wall Street partners in the last few decades. If you study the outstanding open interest for gold futures, silver futures, platinum, palladium futures, the open interest is way ahead compared to, let's say, coffee or cacao or other soft commodities. We know of one example where there was a shortage developing in the physical palladium market in 2018 and 2019, that there was a short squeeze on the COMEX. So traders who were short palladium had to cover because the physical demand overwhelmed the paper supply. And then we saw a huge decrease of the open interest in palladium. So that's real evidence that these huge short positions by Wall Street traders was being used to suppress these markets. And I think what we're seeing now, and it's now October 25, we see huge pressure on the COMEX for at least a year now, leading to a huge physical delivery out of the COMEX system, which is putting huge pressure on these traders. US traders have these huge short positions. And the jury is still out how this will unfold and who will take the losses, and if these short positions by US traders were backed by the Federal Reserve. But I'm convinced it's part of the war on gold. And it's also part of the musical chair on gold, because when the music stops and everybody wants to have physical, and we're seeing this race now towards owning the physical gold yourself, it might turn out that a lot of ounces of physical gold were sold several times to several clients, because we also know about the scandal of the unallocated gold sales by Wall Street banks. Wall Street banks have been fined because they sold their clients physical gold positions, but it turned out they were unallocated positions. There was no physical gold stored for these clients in the vaults of JP Morgan or other Wall Street banks. So now more and more gold investors are starting to worry whether the physical gold holdings will be there when they will need it. You see this huge flight towards the physical holdings. You see the outflow from the COMEX system. I think we're at risk to enter a very dangerous phase in this gold bull market, that you get a collapse of the COMEX gold or silver trading. It happened to the potato market in 1976. There was a huge trader who had huge short positions on potatoes. He couldn't deliver, and you get the collapse of the paper trading in potatoes. They never restarted trading potatoes ever again after 76. So it's my idea that many people think this is the top of for the gold market. It's just like 1979 or 1980. Gold is reaching $4,000 or $5,000. That will be the top, and then it will go down again. But I'm a bit afraid that the collapse of the paper trading system, of the COMEX paper trading system, will send gold, silver, platinum, palladium much, much higher. And that's all to unfold still.
What price targets realistically within the next 12 months?
If we would see a collapse of the paper trading system centered around the COMEX with all these unallocated precious metal positions, you could expect gold to move much higher than $4,000 or $5,000 per ounce. I wouldn't be surprised when gold would shoot up to $10,000, even $20,000. I wouldn't be surprised that silver would move in a very quick and violent way towards $100, $200 per ounce. Because silver is needed as a commodity, and that's different than gold. So there's even an analyst I follow, he said you could have a gold-silver ratio 1-to-1. So which means, let's say gold goes to 10,000, silver could go to thousands of dollars per ounce. And silver is such a tiny market, it's such a small market, and it's so important for the industry, for the solar panels, and even for the iPhones, that so we as a fund, we are as investors, we are accumulating ounces in the ground, waiting for these very big spikes to happen. I think that the big prize for us as commodity investors is not what the money we make now. We're up 65% year to date. That's great. We have 200 million euros under management. That's great. But I think the big prize is still ahead of us.
Is there instances, if we look at the custody of gold with central banks, where central banks, reputable central banks, have tried to retrieve the gold and have been met with very questionable answers?
In the early 2000s, we saw in quite a number of European countries that citizens started to question members of parliament about the gold holdings being kept by the Federal Reserve, and they were asking their governments to repatriate the gold holdings to Germany, the Netherlands. I've been part of such a movement myself in the Netherlands. I once wrote an open letter to the NRC Handelsblad titled "Noud, waar blijft ons goud?" Calling the Dutch central bank president to return the gold holdings from New York to the Netherlands, actually, which they did partially. But we know from the German situation that the German central bank asked for the repatriation of part of their gold reserves. And then they had to negotiate with the Federal Reserve about the return of their gold. And then the end of the negotiation was it would take the US 7 years to return only part of the German gold holdings. Well, when you go on a holiday, you ask your neighbor to to hold your gold or silver or your jewelry, and you return from holiday and ask it back, and he says, well, you need to give me 7 weeks. Then you know he sold it. And he can't deliver it. So it's another indication that the US has played so many tricks, even with the gold holdings of the sovereign European countries, which they were storing for them, because Russia was the risk of Russians invading European countries was that large that they would better have their gold stored in the US still.
Great story.
Yeah.
Great excuse.
Yeah.
And talking about the US gold, we've also had a conversation earlier, and I want to put this as a disclaimer. This is speculation.
Yeah.
About the gold reserves that are held in, obviously, the Fort Knox, that famously Elon Musk was making a whole fuss about it. We haven't heard ever since then anything about this audit. And the gold at the New York Fed, and with just a few pictures that will be also shown. What is your theory about that? And like I said, speculation.
Speculation from our point, from our side. When you study the history of Fort Knox and you study the history of the Federal Reserve holdings in New York, in Fort Knox, the US gold holdings are stored. Supposedly, over 8,000 tons of US gold should be stored in Fort Knox. The gold held for sovereign countries like the Netherlands or Germany, that's all stored with the Federal Reserve in New York. We have this awkward situation that all requests in the last decades to be able to audit, to check or to see the gold stored in Fort Knox were always met by lots of stonewalling. There was the last audit, full audit of Fort Knox was in 1954. The last visit by members of Congress to Fort Knox was in 1974. If you study pictures from this visit to Fort Knox from 1974, you see these pictures with all this gold stored in a very unusual way. If you compare that to pictures of other central banks, how they store their gold, you see it's like a facade. They show you a room filled with gold, but it's not in the normal, traditional way how you store physical gold. Then if you look at the situation at the Federal Reserve in New York stores gold for countries like Germany and the Netherlands. There's only one picture available of the gold stored in the Federal Reserve. You see an open vault door, and again, a facade of gold. You can't look into the room, you can't look into the vault. And if you study that picture, it's clearly built like an Hollywood facade. You know, you show the whole vault is filled with gold, but you can't actually look into that vault. And again, if you compare that with pictures of the traditional way gold is stored by central banks, you see, well, for me, it's another indication of all the tricks being played by the US in this war on gold.
But there's another bit more speculative aspect to the gold and as reserves is also the amount of reserves held by other countries. In that case, it's China. If we look at the total reserves in a percentage base, the G7 has about roughly 50%, around 18,000 tons of gold stored in the central banks. And if we look at the BRICS countries, it's barely below 20%, around 18%, and represents maybe up to 8,000 by now tons of gold. So that's considerably less. And if we talk about the weaponization of gold of the Eastern countries, then it might be maybe not in their favor to use gold as a weapon if they are having so few reserves. So either the numbers are not correct and China is having much more gold and Russia much more gold than they actually say they have, or there's something else at hand. What is your view on that?
Well, I think you can't trust official numbers on gold. Whether they're from the US, I doubt the US has over 8,000 tons of gold in Fort Knox, but we can't prove it isn't there. I do believe that the Chinese have almost 3,000 tons of gold in official gold holdings, but I doubt that's the whole story. I do think they own much more. And when I was in China for the presentation of the Chinese edition of the Big Reset, I had a very remarkable experience, because during the presentation at the International Monetary Institute in Beijing, there was a former Chinese central banker in the audience, and he said that he read the book, but he had two complaints. He found two mistakes, because I said that the official gold for China is stored with the National Bank of China, People's Bank of China. He said that's not true. We also store it with SAFE, and there were two other official institutions who also store gold. So that was very remarkable. So I was very glad that he found a mistake in the book. But we also know, and I've been writing about that in the Big Reset, that the Chinese have a program which is called Storing Gold with the People. And this has only been published in a Chinese press release. There was one gold researcher who discovered it. It was never translated into English. But this program of storing gold with the people tells about that you can activate a program in which you make it easier for people in China to accumulate gold on a private level, like, well, just like what GoldRepublic is doing in the Netherlands. So you have all this retail crowd buying gold and silver, and in this official program in China, Storing Gold with the People, they describe that when there's a crisis, you can always make these citizens come to the government and hand over their gold, and then you can use it as official gold holdings. And actually the same has happened after the great financial crisis in South Korea. When the South Korean central bank was confronted with this great crisis, they called upon their public to hand over their gold, receive some fiat money in return for that. And actually the US has done the same during the 1930s, when Roosevelt said to his American citizens, you have to give over all your gold holdings. You can no longer hold them privately. We'll give you $20 per ounce. And then when they had collected all this gold and remelted it and put it in Fort Knox, Fort Knox was actually built to store that gold. Then gold was being revalued from $20 to $35. There was actually devaluation for the US dollars by 40%. So we know from history that countries, governments understand that you can, confiscate or use the gold being owned by the public. But this has never happened in Europe so far.
Is the Chinese strategy, Luke Roman also wrote a lot about this. We had also Zoran Posor, who most famously also wrote a long great article about this, is about the remonetization of gold, but in a very specific way, to tie it back to commodities, and more particularly BRICS countries, who are very heavy commodity-driven countries, to anchor gold on their trades and their settlement. I wrote this article about the tokenization of gold and how BRICS could save 1 to 2% of the intra-BRICS trades with that kind of method. How do you see the plan for the Chinese and as a whole the BRICS using gold more specifically in their infrastructure and in the financial system and redefining the monetary world?
Well, I think many people make the mistake by looking at gold in a very binary way. So the financial system is backed by gold or it isn't backed by gold, and it's fiat only. I think we're morphing with the financial system to a new phase where gold is being reintroduced into the financial system, but not to build a fully backed financial system like we had during the days of the gold standard. And if you study the actions by the BRICS alliance, it's very early days, but it's quite clear that they're building a trade and settlement system, financial system, which is almost in competition with the Western US dollar-based system. So I envision that the US dollar-based system will stay operating in almost the same way for a number of years. But the BRICS countries, China's leading that effort, is building their own separate system where gold is being used to settle international trade. And we've seen the first signs of that already. So part of the US war on gold and keeping the US dollar in control for world's financial, business and trade is to make sure that the oil of OPEC countries was only sold in dollars. We call that the petrodollar deal. That was originated in 74, 3 years after 71, when we had the huge dollar crisis. And Kissinger convinced the Saudis that when the Saudis would agree to only sell oil for dollars, US would give the Saudis a security guarantee and build Saudi into this great modern nation. We know that Saudi accepted payments for oil in non-dollar currencies. That started a few years back by trading with China. We know Russia and India are trading oil in non-dollar currencies. So we see more and more of the world trade developing in non-dollar currencies. And more of the BRICS trade is done that way by avoiding the dollar. And the net settlement of these trades between countries can be done in gold. So we see the first signs of a build-up for a new financial and trading system coming from the East. Zoltan Pozsar was the first to really write a great analysis about it only weeks after the Russian invasion in Ukraine in 22. The jury is still out where we will end and whether the BRICS system will be the main financial and trading system for, let's say, the next 50 to 100 years to come. But currently, most of the international trading is still done in US dollars. So it's very interesting to see the birth of this new system. It's very interesting to see that gold is coming back into that system. But I wouldn't be surprised when the US takes the initiative to bring gold back into the dollar-based system to try to position US in a way that the BRICS countries don't have an advantage, that they will use gold in their system before the US can do that. But in a way, whatever scenario will unfold, I'm quite sure that the role for gold will be important. Gold will come back into the financial system. Gold will be reintroduced into the financial system. And the fact that all these central banks are now buying gold for their own reserves is an indication that they know what's coming and they are preparing themselves. Just like the high net worth, the smart money is doing.
Mm-hmm. You've also alluded to the fact that the Fed has a revaluation plan. There was an Fed article in August 2025 that pointed that they were considering or looking into ways of revaluating gold.
Yeah, if you study the ideas on revaluation, these weren't discussed in central bank circles before, let's say, 24. So this is all quite new. It was quite a surprise for gold analysts that the Federal Reserve was discussing this in an official paper. The US clearly understands what the benefits are of a gold revaluation. It really helps to balance your books. US is using its gold reserves on the balance sheet of the Federal Reserve and the Treasury. So that's a nice example of some double bookkeeping, which it will be highly beneficial for the US to revalue gold, but the US will be very cautious to revalue gold to much higher levels because that will greatly benefit countries like Russia and China. And to come back to your previous question, a revaluation of gold will be needed one day to help central bank balance sheet. And as you know, China is having some financial economic problems of its own with the huge downturn they have after the collapse of their real estate. So a revaluation of gold will help central banks in the East and the West. But because there's such a divide now between the US and China, they see each other as enemies. It's hard to envision a joint revaluation worldwide. So it's much easier for me to think about a bifurcation of world's financial system where you have this Western dollar-based system which will treat gold in a certain way, and you have this Eastern China-led BRICS system which is using gold also in a particular way. And that has been the largest change for me in my line of thinking where the big reset would lead to. I was hoping 10 years ago that the East and the West would be aligned enough to join forces to bring the international monetary system to a next phase in the best way possible for all. But I'm afraid in this new era of confrontation, this won't be possible anymore.
You've mentioned already Tether, that they have a gold-backed stablecoin, and I think it just reached 1.5 billion in terms of market cap. And you've also said that, there are more and more holding. Did I understand correctly when you said they're holding just as much gold as China?
They're buying. Tether currently is buying as much gold on a monthly basis as China, as the Chinese central bank.
All right, so that's a big number to put in perspective.
But Tether is also the 7th largest buyer of US Treasuries now, making them also, like it's like a huge country buying Treasuries.
It's a proxy, but in terms of Treasuries and total amount of held Treasuries, I think stablecoins are really down the list still, like the number 25 or something.
Yeah, but if you look at the volume of monthly purchases, they're already number 7 now.
So that begs the question as well onto the future of then gold in a digital world, which is then the process of tokenization. We've already a bit talked about this, but how would it look like? And do you believe that's a viable route for things like gold, but in general also commodities?
On the question of tokenization, if you study the birth of digital money, which actually started a good 15 years ago with the introduction of Bitcoin, the success of Bitcoin has clearly shown also to central bankers that digital money is the way to go. You can't stop the future. But central bankers do have a huge problem now because Bitcoin and other successful digital currencies is a form of private money. And when you study monetary history, we have seen some great examples a few hundred years ago of very successful private money. Actually, almost all money was private when it started, where banks were giving out, introducing their own currencies. Most of these examples from the past, they failed, and that's why central banking actually started, and central bankers and governments took control over the money supply and the circulation of money. So the fight and the competition between central bank money and private money has always been there for centuries. And what I find fascinating now, that central bankers have reached the point that people start to distrust their official currencies, you see the rise and the birth and the invention of private money again, which is becoming very successful. And now central bankers have to ask themselves how they can compete with this successful private digital money. And they try to do that with CBDCs and the introduction of CBDCs. And they were hoping to outnumber and outplay the Bitcoins of this world. And the Chinese had done that quite successfully by kicking out the Bitcoin community and the Bitcoin miners. But now central bankers learn that you can't undo Bitcoin. Bitcoin is there. It will always stay there. It's successful. Because of the success of Bitcoin, we've seen the rise and the birth of stablecoins, which are even more successful. And now the US has decided to back the rise of stablecoins in a very large way. So this wave of private money competing with central money, central bank money, that's a huge fight now. And it's almost scary that the US government is now backing this trend, because in a way, you're fighting your own central bank currencies. And it's very early days in how this fight will develop and who will win. But I think this adds another layer of pressure on central banks, how they can keep control over money.
And I think it's a very interesting part about why they do this. And what I'm saying is a concoction of all the information I gathered, but I think this makes sense if you look at it in the following way. By giving, through the Genius Act, a regulatory permission of those coins to exist, they are, as you mentioned as well, one of the prime buyers of US Treasuries, which having record low auctions. No one wants those treasuries, or very few people want, thereby creating a proxy for demand for treasuries. By allowing a few stablecoin players, they have regulatory control over them. So just like any big corporation, tech company, or any other that we've seen in the US, they have a direct way of holding them on a leash in a way.
And to come back to your question on tokenization, so because these stablecoins are now one of the buyers of last resort for the US Treasuries, it becomes very important for the US that more and more trading in equities or in commodities or whatever will be done through stablecoins. So the US will be highly supportive in developing all these new exchanges which will use tokenization. And also many private companies in the financial space of trading and investing, just like ourselves, we would love to work with tokenized assets, because trading and settlement is instantly. If we buy shares now or sell shares, it settles only 2 or 3 days after the trade, and this is, mistakes can be made. So if you put it all on blockchain and use tokenization, is way more efficient. I think we're seeing the start now with BlackRock supporting this. Wall Street banks are starting to support this, although it's highly it could mean huge competition for the Wall Street banks, because their business model to get fees from trading, these flows might diminish because of this. So for Wall Street was always was not the first to act on tokenization, but now the Trump administration is pushing this. I think they can no longer ignore it and will start to join the race. So this is one of the largest innovations we've seen in the financial industry, in financial markets, I think in the last 50, 60, 70 years. And it's still early days, but the US will support it because of the increased demand for treasuries this will bring.
And so what I think where it's going to head then is that since they have so much control over those players, they'll be able to de facto have their own CBDC, but it will be a congregated CBDC. It will be a bunch of single commercial players that are able to be controlled and have a de facto CBDC because it's in the blockchain, you can trace it, and you're the one that permits it.
On the topic of tokenization and stablecoins, I think we'll see huge competition between the US and China again. And China will never help the US to build a very successful stablecoin tokenization system in which they will again be used to support a dollar-centric trading system. So there will be a lot of competition. But for me, one of the most interesting aspects is this fight between private money and central bank money.
And gold might actually be seen as at the intersection of this central bank money and the private money because it's actually used for both.
Well, that's the first signs that Tether is starting to buy a lot of gold now. It shows that it doesn't matter whether it's private money or it's public money which is in favor. Both need to be backed by gold to become a winner, to be the currency of choice by the general public, because you have to put a solid foundation of value under the currencies. Otherwise, the public won't trust it.
Thank you, Willem.
It was a pleasure.